Yay! My glasses. Glasses. Okay, that's good to go. Oh, imagine that. All right, so who do we have tonight? We have John Tran. Good evening. Pete, how are you today? Good evening. Here, we got Diana, Brother KS, MCRO, Mike, Sammy, KG's in the house, Miguel, good evening. Where's Dad? Mike in love. Okay, good evening. Jimmy, good evening. T-Vic, what's going on? Ants, what's going on? Trevor, together from S. I have no idea when. Drippin' Net. Just curious, good evening. Mo Salah, good evening, Mo. Christ Moneymaker. Okay, good evening. Official coach, David G, what's going on? Antonio, good evening. Tamara, good evening. Baby Bacon. Okay. Ebby, David, Ebby, cool beans. All right, let's get ready to get started. Oh, all righty, not bad at all. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest for dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. Now, for those of you that are new here, yep, I've been doing this for a while. My main objective is to consistently bring in cash flow for my personal, what do you call that? Retirement. Okay, 61, I'm retired. The only money I have to work with is the money I accumulated along the way. And if I'm getting 1% a week, that covers all my bills. That's what I'm looking for. So I'm sharing that with you. If you have any questions, fine. If you want me to take a look at something, I'll be more than glad to take a look at it. But I'm not going to apologize for being blunt. If it's no, it's going to be a no. And I'll tell you why it's a no for me. That's for me, and it's like I'm different than everyone else because my agenda is different. I'm looking for 1% every single week. And if I can get 1% every single week, that comes to over 50% per year. Now, 50% per year return for my investment, well, that takes care of all my bills. And you may think that's difficult, but it's really not. The trading strategy I'm about to share with you this evening was created for a 9-year-old little girl. So my 9-year-old daughter, back in 2008, it was quite a while ago, she said, "Daddy, what are you doing? Can you teach me?" I said, "Oh, give me a little bit to come up with something." So it took me a while to come up with a trading strategy specifically designed for a 9-year-old. All right. Apple user, we'll take a look at Bud. Uh-oh. I think my pencil's dead. Nope, there it is. Bud. B-U-D. We'll take a look at it. Can't promise anything because I don't think I've ever bought Bud before. Boston Kid. Oh. All right. Glock, what's happening? Dragon Master. Lou LaBelle. Good evening, Lou LaBelle. William Player, what's going on? Bax Capital. Anil, what's going on? Tendrika. Jonathan. Good evening. Brian No. And Claudia, good evening. Steve Benno, what's happening? Good time. Hello. Okay, so needless to say, the trading strategy, it was created for a 9-year-old, so I'm about to show you what that's like. And if you have something you want me to take a look at, please do me a favor. This show is called Dividend Stock Talk. So if you're going to suggest me to take a look at something, please make sure it has dividends, okay? And I'm looking for a minimum of 2 decades. That's 20 years of dividends. So please try to keep that in mind. Oh my goodness, JEPQ, did you not just hear me say 2 decades of increased dividends? JEPQ is a no, but I'll take a look at for you, and I'll tell you why I don't like it. Besides the fact that it doesn't fit what I'm looking for. Okay? Ethel. JEPQ. Okay, so Ethel, what I'm looking for specifically, 2 decades is too long. Dear, do you realize, Ethel, yeah, I get that, Ethel. All right, so 2 decades, that's only 20 years. Okay. The stock market's been around for 400 years. Okay. The first dividend stock was sold in 1602. 1602, the first dividend stock. So why do you think 2 decades is too much? Out of 200 years, 2 decades shouldn't be too much at all. Yes, but the last 20 years have been different. I understand that. Yeah, I get that also. But still, companies that are over 100 years old still increase their dividends every single year. So if there's over 300 companies that have 20 years or more of increased dividends, well, what about these 300 companies you don't like? There's IBM, AT&T, General Motors, Home Depot, Target, Lowe's, Bank of America, Ford, General Motors, a whole bunch of them. Procter and Gamble, General Mills, Kellogg's, Heinz Ketchup. I can go on and on. There's a whole bunch of companies that are more than 100 years old. AMGN is not 100 years old, but I get where you're coming from. Robert, do I have to use calls or can I just make market buys and sells? I'm not very sophisticated at T. Okay, I'm not quite sure what at T means, but all right. Oh, at trading. Okay. So here's the thing, Robert. Okay, Jared, please don't do that. Jared, I appreciate you sharing the love. I really do. Once is perfectly fine. Okay. I read every single comment. Okay, so you doing that over and over and over again just takes up space. I lost everything with these methods. Tony, no way possible. I have a 9-year-old that does plenty consistently. So if you lost everything, I'm kind of curious what you did, Tony. It's a simple strategy. Boston Kid, Coca-Cola. Take a look at Coca-Cola. Boat pays nice dividends. What the heck is boat? Never heard of it. B-O-A-T. Okay, Coca-Cola. Aquatech, good evening. Tim Bex, good evening. Getting a boat. Oh, I got too many of them. All right, anyway. It seems, hey, Scotty Cook's in the house. How's it going, Scotty?
James, can you mute me?
Hey, yes, I can. How you doing there today?
Good, thanks.
Outstanding. Get a little bit of mute. Now, if you have any questions, you guys, make sure you unmute yourself and just speak up. Just say, hey, James, I got a question. Okay, that's what you guys are here for. You got a question, ask. All right? All right, let's keep on going. Tim Bex, I am wonderful. Thank you for that. Ethel, sit, chill. I'm going to show you a few stocks. If they make sense, great. If they don't, perfectly acceptable. Say, I've been doing this for a while, and my goal is safe, predictable, consistent 1% a week. That's over 50% per year. Now, I've been doing this for quite a while. TD, Mr. Tobacco question. You own any? Nope. More than JEPQ. Oh my goodness, we are going to. Why not government bonds then? Because there's not a single government bond that pays over 30% per year. Nope. Okay, so Ethel, I don't like anything that doesn't pay over 30% per year. Okay, so if I can do 50% per year, why would I look at less than 30? Okay, sit tight. We're going to get to that. Hawk, IBM, take a gander at it. IBM. Banger talk. What's happening? Johnny Bag of Donuts. Way to go. I want over 15% a year. Johnny, you're new here, dude. Trust me, I would remember that name. That's a good one, Johnny. All right, so let's do this. Let's get started. Let's get rid of this. Leave that there. Okay, and we want that. And we want that over here. Whoa, come on. Okay, is that, nope, too big. Let's make it a little smaller to fit. And there we go. There we have it. Ready to roll. Okay, Ethel, now you've asked a couple of times. I'm going to show you what I think of JEPQ, only because you asked nicely more than once. So let's take a look at JEPQ. And Ethel, I'm going to explain to you why I don't like JEPQ. And hopefully you stay around long enough so you see some of the things that I do like and see if it makes sense. Because there's only one question I want you to get over first. The first question I want you to comprehend and understand is, does it make sense? Same thing for you guys over here, okay? Johnny Bag of Donuts. The only question I want you to figure out at first is, does it make sense? Okay, then we have a few other questions to answer along with that, but number one, does it make sense? All right, so Miss Ethel wants to take a look at JEPQ, okay? Now, I'm not going to bring it up on the charts. I'm going to bring it up on Yahoo Finance. JEPQ, oh, wait a minute, JEPQ. JEPQ, there we go. All right, so first, Ethel, I'm going to show you, what does that say? Sense. No, not that kind of sense, but I get it, it's funny. You are absolute genius. Thank you, Stock Learner. All right, so here we go, Ethel. You ready? Johnny, you too? Here we are, okay? JP Morgan NASDAQ Equity Premiums Income Electronically Traded Fund. Okay, yeah, I know it's an exchange traded fund, but that's a bunch of BS because these exchanges all run by computer. So it's an electronically traded fund. You're giving your money to a computer to do for you. Now, I'm not going to get into the, the 2010 Space Odyssey, where the computers kill people. Or I'm not going to do the what do you call it? Uh-oh. Terminator. I'm not going to do the Terminator series either. Okay? Yes, I get that. I don't trust AI at all. Anyway, so here we go. Let's take a look at it. JEPQ ETF. It's $52 per share. Let's see how consistently they increase their dividends. Okay, so let's go back all the way from March 17th, 1980. That's going back more than 20 years. You see that? Dividends only from 1980 to today. How often has JEPQ increased their dividends? Well, let's find out. Okay, all right, 22 ways. I got a minor problem here. Okay, do you see this, Ethel? Okay, the very first dividend this company had dished out was in June 2022. That's only 2.5 years ago. That means this company's only 2.5 years old. Okay, JEP, yeah, I knew that. I get it. Profit project, I got it. Okay. JEPQ, not even 3 years old. So here's a question. Why are you putting your money into a company that's only 3 years old? Most companies statistically don't make it past 3 to 5 years. Okay. It's not a company, it's a fund. Oh my goodness. I just love it when people correct me. I do. See, a fund is in a, what do you call it? Company. Imagine that. It is a fund which is what's the word? Which is managed by a bunch of people. Okay, there is a partner, a limited partner and a general partner. Okay, a GP and an LP. In order to create a fund, you need a minimum of 2 people to run a fund. Okay, so running a fund, you have 2 people, a limited partner, a general partner, and then all the other people who dot the T's and cross the I's. But it is run like a company. There's one person in charge. They dictate to everybody else, just like every other company, okay? It is a fund, yeah, I get it, but it's also in a company structure with a limited partner and a general partner and all those little minions down below, okay? So, yeah, but how often has this fund increased its profits to its shareholders? Well, the very first one was in June 1st, 2022. Great. What was the dividend? Well, it was 37. Now, ask me this question, or I ask you a question. Either way, however you want to look at it, if the first dividend is 37 and the second dividend is 34, isn't that going backwards? Isn't it supposed to be more profitable year after year after year? So who do we got here? Caden, XRP is not a dividend stock. Okay, the name of the show is Dividend Investing for weekly cash flow. XRP doesn't have dividends. No. Okay, so here's the question. If the first one is 37, shouldn't the second one be 38, 39, 42, something higher? AbbVie, we haven't looked at AbbVie in a while. ABBV. We'll take a look at that in a bit. So the question, Ethel, why is it going backwards? If the first, good morning. If the first dividend is 37, the second one should be higher, but in this case, it's not. It went backwards. Okay. 40, 54, 38. That went backwards again. So that's backwards twice, and we're not even done in the first year. 68, 54, backwards 3 times. 57, 44, backwards 4 times. Okay, 44. 43, backwards 5 times. 45, 48, 35, backwards 6 times. 36, 36.7, 36.6, backwards again 7 times. 45, 41, backwards 8 times. Do you see where I'm going here? This company is not consistently profitable. The yield is huge. Ethel, no, it is not. Let's go to JEPQ. Okay, so needless to say, it goes down about the same amount of time it goes up. Okay, so it's 2.5 years old. Okay, half of the time it goes up, the other half it goes down. Ethel, 11%. You think 11% is good. Okay, so Ethel, here I teach people how to get 1% per week. Now, 1% per week is over 50% per year. So why do you think 11% is good? I like 50%. James is the best. Thank you, Jonathan. I have watched him every night for over 6 months. No. All right. Thank you there, Jonathan. David. Pepsi, Merck, Bristol Myers Squibb. Oh, cool beans. Now, I don't know why you bought Pepsi. Pepsi wasn't, wait a minute, Pepsi did bounce, didn't it? We looked at it this morning, but it wasn't quite there. MRK, we'll look at that one also, and Bristol Myers Squibb, BMY. All right, so we're going to take a look at all of those, Dave. Sit tight. Ethel, yeah, 50% is whack. You think that's whack? Oh my God, hold tight. I got something for you. Pepsi didn't pay. Okay, we're going to look at Pepsi in a little bit. I second that. I watched him like 6 days. All right, let's do the quick cool beans. KG, it takes time. Yep, hold on. Thank you. All right, so Ethel, I got this for you. You ready, Ethel? Hold on, you're going to love this. Let's go. Here we go, right here. All right. All right, Ethel, you ready for this? I hope you're good with numbers. I do. Weekly trades 2025. Now, I have 7 different accounts. 7. I share 3 of them publicly. Okay, Simone, what's happening? I share 3 of them publicly, Ethel. Okay, so right here, account 1, account 2, account 3. Every single one of my trades. You ready? Here you go. This is just last week. Alcoa, Macy's, Harley-Davidson, Riley, Riot, Kohl's, US Steel, Devon Energy, US Steel, Devon Energy, and Riley. This is just 1 week. Just 1 week on one account. Okay. So, 1 week on one account, 1.46%. Okay, it's not the greatest in the world, but Ethel. Okay, Ethel, you do know the difference between red and green, right? Okay, red is when you sell something, green is when you buy something. It doesn't mean red is bad and green is good. No. Red is when you sell something, make a profit. That's what I'm doing, making a profit. That's why it's all red. Red is a good thing. Fascinating. Baylor, thank you. You need to learn to. Thank you for that, KG. But yes, Ethel, green is when I buy something, red is when I sell something. Okay, so I buy stocks and every single week I sell. That's what the red is for. I sell a covered call against those pieces. All right. So as you take a look, Miss Ethel, right here. Okay, week 18, which was April 28th, May 2nd, week 17, week 16, week 15, week 14, week 13. So we are in week number 20. Today is week number 20. Okay, so all of these weeks, okay, you add it all up together, young lady. You ready? Beginning January 1st, I started out with 151, account 1. Account 2, 143. Account 3, 114. As of this moment, account number 1 is up 49% for just this year. Account number 2 is up 41% for just this year. And account number 3, look at that, it's up 62% for just this year. We're in week number 20. I average 1% a week. 1% a week, supposed to be only 20%. But these numbers are freaking ridiculous. Since the old orange boy showed up, the numbers are a lot higher than they used to be. Okay, this is trades for 2025, which is this year. Okay, right here are the trades for 2024, all 52 weeks. Okay, all 52 weeks. So last year, holy cow, last year, account number 1 was 74%. Account number 2 was 63%. And account number 3 was only 33%, but account number 3 only started in July of last year. So it was only 6 months. So as you can see, who is my broker? My broker is Charles Schwab. So as you can see, the numbers, and I share these numbers readily. Okay, I'm not hiding anything from anyone. These are everything that I bought last year. Here's the profits and losses, okay, of everything I did last year. I share everything. Okay, so every morning I have a trading group that we trade together. They watch exactly every single trade I've made for the last 2 years. Show the Charlie Schwab website. Oh my God. I can't stand it when people question me. Right, there's Chucky Schwab right there. Confirm your identity. I ain't doing that. All right, let's get back out of there. So, needless to say, Royal One, I wish I knew how to do this. It looks complicated. Royal One, now you're new here, because trust me, I would remember that name. Now, listen closely. The trading strategy I'm about to show you was created for my 9-year-old daughter back in 2008. She crawled on my lap, said, "Daddy, what are you doing? Can you teach me?" Blah, 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 all that kind of nice, neat, fun stuff. All right, so here we go. Let's take a look at the video. So it's really not that difficult. Flash, I'm doing this and it works. Hey, Flash, cool beans. All right, so that's 2 live, and look at the videos. All right, oldest videos, and one oldest. Here she is right here, princess herself.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad did let me go on that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month.
Okay, that's me. 15 years ago, when my daughter asked me, "Daddy, can you teach me?" Okay, so it's my favorite part. I laugh every time I see that. I had to make it fun and exciting. She was only 9 years old. So how do you keep a 9-year-old entertained? Well, you got to do fun, funny things. All right. So that being said, I had to come up with a trading strategy specifically for her. So let me briefly explain, and then we're going to start looking at some stocks. That way you don't listen to me blab all night long, because that's probably not what you're here for. Number one, it had to be simple. Remember, she was 9 years old. She wasn't a Mensa student. She wasn't an honors student. She was just a regular average girl. Had to be simple. It had to be safe. It had to be predictable. The income had to be consistent, and no way for her to lose. Do you understand that? No way for a 9-year-old to lose, because we all know if a 9-year-old starts losing her money, she's going to cry. Daddy's going to feel like shit. Mama gets involved. I'm sleeping on the couch. Yeah, I like peace and quiet in my family, and that's not some drama I wanted to get. So, simple, safe, predictable, consistent, no way to lose. Great. 5 rules. You ready? And they're pretty simple. If you think about them, they are pretty simple. Rule number 1. If you're not willing to take the stock to the grave with you, meaning if you're not willing to buy it and hold it for the rest of your life, don't buy it. If it's not a good stock, it's not something you understand, if not something you want to hold on to, don't buy it. It's that simple. If you don't like it, if you don't understand it, don't buy it. It's simple. Rule number 2, never sell at a loss. It defeats the purpose. Okay? And if you're not ready for a stock to drop 50% for $88 and it drops to 44, don't panic. Remember rule 1. If you like the company and you want to keep it for the rest of your life, collect those dividends, collect those premiums, and keep the cash flow rolling. Rule 1, if you don't like it, don't buy it. Rule 2, don't sell at a loss. Stocks go up, stocks go down. If it goes up, it's going to come down. If it comes down, it's going to go back up again. That's all they do. They don't come to your house, wash your dishes. They don't take the dog for a walk. They don't even make the bed. Stocks go up, stocks go down. That's it. That's all. Rule 3, make sure the company is consistently profitable. When I say consistently profitable, you have a couple of choices. You can read 10 to 20 years worth of earnings reports and quarterly reports, or you can go right to the dividends. And here's why this is called Dividend Stock Talk. Because a dividend is a portion of the company's profits they give back to the investors as a bonus for owning the stock. That's it. You got 2 choices. You can get the profits shared by the company, or the company can take those profits, put it back into the company for capital growth. Now, every single week, we look to see how many companies are available. Okay, yesterday there was over 10,042, I believe, something like that. Crazy number. But over 10,000 different companies. So if a company shares its profits and the profits increase every single year, well, common sense tells you that if the profits increase, the dividends increase. Okay? Because the dividends cannot increase unless the profits increase. It's actually that simple. All right? You can't get light from a light bulb until you turn it on. Same thing. If a dividend increases, that means the company's consistently increasing. So why even look at the reports? Just go right to the dividend. Is the number higher? And it's not that difficult, because number 2 is higher than 1. Number 7 is higher than 5. We all know this. This is simple. Okay, 25 is higher than 23. Okay, the number should get higher and higher and higher every single year. Consistency of profitability. Okay, I like 2 decades. Stock market's been around for 420 some odd years. I don't think 2 decades is a lot to ask. As a matter of fact, there's over 300 companies that have dividends consistently increasing for more than 2 decades. And I'm going to tell you them in a minute. Hold on. Rule number 4, weekly options only. So in order to earn weekly cash flow, you got 2 choices. 1, buy and sell something that trades weekly. Weekly options. Or 2, sit in front of your computer and watch this all day. I have no desire to do that whatsoever. So anytime you see one of my videos, it's always, hey everyone, my name's James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So the trading strategy created for my 9-year-old was specifically designed for her to be able to trade for 10 minutes. That's it. Okay, That being said, rule number 5, make sure all the numbers work. And we're going to actually show you a couple of trades, so walk you through them so you to understand what they look like. So I have 3 or 4 questions. That's it. Number 1, does it make sense? Number 2, do I like this company? Number 3, do I like this company at this price? Number 4, am I willing to hold on to this company until the day I die or until it hits my target? Also, trade a weekly covered call every single week. Okay, to me, it doesn't make sense to have an asset that does not pay for itself. So if I buy a stock, it better have weekly options that I can have income every single week. It's actually that simple. Okay, 5 simple rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable, weekly options only, and then make sure the numbers work. So we're actually going to do a few trades and see if it makes sense. Okay? Black Dynamite. Woohoo! Gotta love it. Cola Field Trader. Good evening. Flash. I'm doing it and it works. Cool beans. All right. KG. Flash. Target. Ooh. Flash. We'll take a look at that one. How you doing, Flash? Target. TGT. TGT. Okay. We're going to bring up from last night where we left off. And we left off at U.S. Steel. So as I show you these stocks, as the evening progresses, ask whatever questions you want. I will take a look at whatever stocks you like, and I'll tell you why I like them or why I dislike them. But always keep in mind, I do one trading strategy here and only one. And I have a very specific set of rules. And I have, let's call it a recipe for lack of better words. Okay? 1, 2, 3, 4, so on and so forth. Isaac, University of New Hampshire, huh? UNH. We looked at it last night. It looked interesting. Gary wants to take a look at Apple. AAPL. Somebody wants to take a look at Sun. Is that Suncor or Sunoco? Okay. Target FFH. Never heard of it. Now, it's never ever a good sign for you to ask someone who's been trading as long as I've been trading a specific strategy. And they say, when you offer up a stock, I never heard of it, more than likely it's going to be a no. Ooh, Southern Company. Lady Foss, good evening. Isaac. So Lady Foss wants to take a look at Southern Company. All right, we'll take a look at that in a moment. How do we know if a company offers dividends? Rich, oh my goodness, hold on. Rich, are you ready for this? For those of you who don't know, for those of you that are new, I hope you have a pencil, paper, crayon, marker, mascara, lipstick, whatever. Ready? Here we go. Dividend Kings. Okay, go to Google. Put in Google search. Dividend Kings list 2025. Dividend Aristocrats list 2025. Dividend Champions list 2025. Dividend Contenders list 2025. And then for the fun of it, we're going to look at, Warren Buffett's list 2025. Those are 5 lists right there. In those 5 lists, you will find over 300 companies that have consistently increased their profits for more than 2 decades. Okay? The lists are free. There's a whole bunch of companies dying for your business, and they're willing to give you this list for free. Okay? Put your email address in, they will send you the list. That's the stocks you're looking for. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett. If it's good enough for Warren, why the hell not? Can you repeat the list, please? Royal 1, you ready? Dividend Kings, Aristocrats, Champions, Contenders, Warren Buffett's list. You got it? All righty. QBTS. Isaac, I remember looking at that once. QBTS. And I don't know why I don't like it, but I'm sure there's a good reason. Quantum. Teach us how to see liquidity levels in charts and know when to take the trade on that direction. Wow, quantum mechanics. Okay, so I didn't really think it's an issue because dividend kings, aristocrats, champions, contenders, all that, they always, if you check the volume, millions of shares trade every day on all those companies. Every single one I label to you. The only time you're worried about liquidity is companies that are unheard of. Okay, so a company that's very thinly traded, and well, those don't have weekly options. Andre, what's your strike rate, good sir? Or do you deal with stock dividends exclusively? Okay, Andre, I'm going to ask you politely to please explain that question or ask that question in a different manner. Okay, because it doesn't really make sense to me. Because I know a lot of what you're saying, but the way you bundled it together, it doesn't really make sense. Okay, what's my strike rate? I'm not quite sure what that means. I know what my strike price is usually as compared to my purchase price. Well, that part's easy. But what's your strike rate? I have no idea what that means. Or do you deal with stock dividends exclusively? I don't really like to collect dividends. Isn't that weird? I have a dividend channel, but I don't like to collect the dividends. Well, here's the reason. You ready? Now see if this makes sense. A dividend is a portion of the profits the company gives to the investors. Okay, we know this. But a dividend also is what's a good way to, an indicator, a beacon, a light, a lighthouse, whatever you want to call it, something to show you, here it is right here, what we're doing. You're trading futures. No, not trading futures. I'm trading dividend stocks. That's probably where we had some of the confusion. Stocks have dividends 4 times a year. So you may cycle the same stocks over again 4 times a year? Exactly. Can you show us a candlesticks and how different sticks mean different signs when to buy? 3A Ghost. Okay, we're going to get that in a little bit, but if you have a question about candlesticks, let me show you really briefly what candlesticks are. Okay? Okay, there's 5 things you want to see. 5 that you want to see on a candlestick. Okay, ready? Number 1, the wick itself. There's a wick on the top and a wick on the bottom. Okay, the top wick is the high price of the day. The bottom wick is the low price of the day. The distance between the top and the bottom is the range of the day, how far it moved. Okay? 4th thing, the horizontal lines, okay, on the top of the candle and on the bottom of the candle. Green is an up day, red is a down day. Reason being, green, the bottom horizontal line, is the opening price of the day. The green top horizontal line is the closing price of the day. Opened here, went up and closed. That's an up day. The red ones, okay, the high, the low, the top horizontal line on a red candle is the opening price. The bottom line on the candle is the closing price. Hence the reason it goes top down. So red is a down day, green is an up day. 5 things: open, high, low, close, and range. Okay? 5 things you want to know about a candle. Okay? Stocks go up, stocks go down. It's actually that simple. Adults have a tendency to make things more complicated than they need to be. Okay? Hope that made sense. Depending on what time intervals you have it on. Oh, okay. So Isaac, I look at 4 charts. I look at the 1-year chart. I look at the 90-day chart. I look at the 30-day chart. And then I look at the seasonality chart. Between those 4. Now remember, this was created for a 9-year-old. So it had to be simple and it had to be less than 10 minutes. Okay, so try to focus on that. Okay, I know you have a lot of questions. Adults have a tendency to make this more complicated than it needs to be. So let's keep on moving forward and let's see what plays out. Okay, so Merck. Somebody want to take a look at Merck? So let's go backwards and get back to Merck. Okay, so here's Merck, MRK. The high of the year is there. Now, anytime I look at a chart, you're going to see a lot of fives. Okay, anytime you look at a chart, I'm looking for 5 things. And it should take you 3 to 4 seconds to spot all 5. Isn't that weird? 3 to 4 seconds to spot all 5 things. You ready? Here we go. Number 1, the high. Number 2, the low. Number 3, where was it? Number 4, where is it? Number 5, look at it. Down, up. It's actually that simple. And it should take you 3 to 4 seconds. See? High, low, was, is, look at it, down and then up. That's simple, right? Okay, second step. Let's look at the numbers. Before we look deeper into the chart, I want to take a look at the numbers. Let's get rid of this. Let's get rid of that. Let's get this back to here. Let's change this to that. Good, there we go. So now we have our chart. We have our last traded price right there, 77.23. Now, the way, when I say a simple strategy, are you ready? Simple strategy, it's called a covered call, which means it's one of the safest trading strategies there is. You can actually do this trading strategy, it's so safe, in your IRA. It's simple, safe, predictable. Remember I say predictable? I want to know how much money I'm making before I even do it. Consistent, remember that? Simple, safe, predictable, consistent. Well, I want weekly options because you see this right here? 23 May, that's this Friday. 30 May, that's next Friday. 6 June, that's 2 Fridays away. 13th June, 4 Fridays away. 5 Fridays away. 6 Fridays away. 7 Fridays. Every single week. Every single position. Every single week. I write a covered call on every single position because I'm looking for weekly cash flow. To me, it doesn't make sense to not do it. Okay, I get amazed sometimes when people tell me, oh, I've had this stock for 20 years, and they get a dividend once every 90 days. Ishmael Moore, how are you today? Isaac, no, I'm saying he might not have it in one-day candles, so the candle won't be the same. Oh, Isaac, the candles are all basically the same. They have a high, they have a low, they have an opening, and they have a close, and they have a range. It's still, you're getting still 5 things out of every candle. Every candle has 5 things. The high, the low, the opening, the close, and the distance between the high and the low. It's called the range. Okay, so whether you have it on a monthly candle, weekly candle, daily candle, hourly candle, minute candle, second candle, all have the exact same 5 things. The high, the low, the high, the low, the opening, the close, and the range. Always the same. Melatonin. How you doing, brother? Hope everything's going well. Beginner wouldn't understand that. Yeah, they would. A beginner would understand. There's a top, there's a bottom. On a candle, there's a wick. The top of the wick, the bottom of the wick. And the distance between the top of the wick and the bottom of the wick, that's the range. What's difficult? It was created for a 9-year-old. 9 years old. It was created for her. What do I think of Chevron? Ooh, John, I'm going to write Chevron down. I love Chevron. But is it the right time to buy Chevron? That's the more important question. Okay? All right, so who's telling me the issue with the candles? Okay, a candle is a candle. Okay? Top, bottom. Okay, the wick, the bottom of the wick, the top of the wick, the distance of the candle. They're all the same. Okay? You have a top, you have a bottom. You have a body, you have a wick. All right, so let's keep on going. All right, so we're looking at Merck. Let's do this over again. All right, so a simple trading strategy, the covered call. So let's take a look. Merck is at 77.23. So a covered call is where I buy the stock. I sell somebody the rights, not the obligation. There's a difference between a call and a put. Puts are obligatory, which means you have to do something. But a call gives you the opportunity to say, yeah, no, you know what I mean? So you're not obligated with a call option. So you have the right to buy it, but you don't have to. Uh-oh. Test account, TSLL, do me a favor. Okay, go to whatever financial website you use and tell me, and put it in the chat, how many years has TSLL increased its profits? Okay, come back and let me know, and then we'll take a look at it. All right? All right. First thing I want to find out, as I was telling you, a simple trading strategy to the covered call. There are literally hundreds of videos online showing you how to do a covered call. Well, it's very simple. You buy a stock, 100 shares, and you sell that right to someone else to buy it from you for the exact same price you just paid for it. And then you collect the insurance premium. I'll explain that in a minute. Okay? So, if I'm looking at Merck and it's currently at 77.23, okay, I get two choices. I can sell 77 or I can sell 78. All right, well, what am I making? Well, am I making more than 1%? Well, the 78s are going for $1. Well, that's more than 1%, because 1% of $78 is 78 cents. Well, this is why I like percentages. It's a lot easier than trying to figure out numbers. Numbers can be confusing, but percentages are easy. Okay? 77.23. Okay? 1% is $77 cents. 10% is $7.70. Okay? 100% is $77. So you move the decimal point over two places. 77 cents is 1% of 77. Okay, JMD, how can you say that's confusing? Really? Seriously? No, seriously, think about it. How can you say it's confusing? Here's the top. Okay, just look at it. Here's the top. There's no other points that are higher. That's the top. Okay, there are no other points that are lower. There's the bottom. Okay, I can get a third grader. Third grader, what direction is it going? It's going down. Adults have a tendency to make it more complicated. That's not complicated. There's the top, there's the bottom, it's going down. That's not complicated at all. What's the current price? Well, that's the current price right there, 77.23. You just got to open your eyes and look. Top, bottom, down, price. So if I'm buying it tomorrow, I'm paying $77.23. It's that simple. Okay, so if I buy it at $77.23, a covered call will allow me to sell it at 77. And then when I sell it at 77, I collect the insurance premium. Because calls and puts are insurance policies. You need 4 items for an insurance policy. Beginning date, ending date, consideration, that's the money, and 4 is the meeting of the minds or the agreement. John, thanks, love your work, you got it. What happened if the 77 goes in the money? Well, hold on a second, we're going to get to that. What do you think about United Healthcare? Okay, Joel, you're about the 4th person who asked me about UNH. Okay, UNH is on the list. You're just going to have to wait till we get there. Okay, so people come on and they give me something to take a look at. So I got a whole list. Do you do long call? No, I do not. Sorry, Tim. I don't buy options. I only sell them. Tim, not sure if you knew this, Tim, but 80% of all options expire worthless. You don't have to believe me. Do the research. What percentage of options expire worthless? It's about 80%. Jack, you're person number 5 who asked me about UNH. Okay, and I'll tell you the exact same thing I tell everybody else. Stand in line, wait your turn. Okay, I put UNH down, it's written down. Okay, I'm old school, I write stuff down. So UNH is down here, and we're only halfway through the list. So I will get to UNH. Tell them, hi, they're worthless. Yep, I will tell you in a little bit. Let's not jump the gun, all right? Okay, so where was I? What was I saying? Oh, okay, so if I'm buying it tomorrow morning at $77.23, I'm going to turn around and let somebody buy it from me at 77. You might be asking why. Well, look at the premium. Look at the insurance money that I'm collecting. If I buy it at 77.36 or 77.23 and I sell the 77s, I'm picking up $1.48. So if you take $1.48, add it to the 77, I'm walking away with 78.48. Well, that's more than I paid for it. And that I'm okay with. Test account, TSLL. 2,010 times it's increased its dividends. I don't think the company's 2,000 years old because I know for a fact the stock market's only 400 years old. So how can TSLL have 2,010 increases in their dividend? Okay, I asked how many years has it consistently increased? So if you go all the way back to 2010, count the very first dividend, okay? In 2011, was it higher? 2012, was it higher? 2013, was it higher? And then, well, why are we looking at it in the first place? It's not 20 years old. It's only 15. I don't do 15-year-old. Uh-oh, FVG. Some dude, FVG, what the heck is that? FVG. Antoine, I did 50 options and only 7 of them were profitable. You're correct. Oh, Antoine, I feel bad for you, brother. When do you think is better, low or high volatility? Okay, 3A Ghost. Who asked that question? Quantum. Nope. Some dude. But when to buy? Well, we're getting to that point. Fannie Mae. Ashley, Fannie Mae. FNMA. Okay. You didn't learn your lesson from 2008. You still want to look at it. How do you know what insurance premium is? Rich, it's right there. Okay? You can go anywhere and look at the premiums for the options. Okay? They're listed right on the what do you call it? Options on the whatever website you use to do your trading, whatever trading platform you use. I use Charles Schwab. This is Thinkorswim, owned by Charles Schwab. I bought at 52 cents. Now it's at 6.88. Made 600 grand. Awesome. Good for you. Not something that I do. I don't buy options. I sell them. Okay, plain and simple. Fair value gaps. Oh, fair value gaps. I'm going to cross that one off because that has nothing to do with what we're looking at. What do you do if Merck drops to 75? Well, Flash, remember rule number 1? Never buy something you don't want to hold on to for the rest of your life. Well, if you're worried about the stock going down, maybe this is not something you should be playing. Because look at the high of the year. It's at 135. That's the high of the year. Well, look at the low of the year. It was right around 74. Okay, so from 135 to 74 is about a 50% drop. So what do? So here's another question for you. Whatever the dividend for Merck is, whether I bought it at 135 or whether I bought it at 75, the dividend's going to be the exact same. You know what else is going to be the exact same? Well, not the exact same, but pretty close. Whatever at the money is. Okay, you have in the money, at the money, out of the money, options. Whatever it is, it's usually the same, 1%. So as the stock drops, you just lower the strike price. As you lower the strike price, you're still bringing in 1% or more. Okay? So let's do a couple of trades so you can see how it works. And that way, some questions will be answered. Is margin investing the same as options? Absolutely not. Okay, Abel, volatility is vitality. TSLL is not recommend to hold. Yeah, I'm well aware of what it is. Tell them how worthless it is. Siri and STZ. Now, I know who Siri is. Okay, SRII. But STZ, what is that? We'll take a gander at it. All right. What's your strategy to decide maturity of the strike price? Carlos, how are you doing today? Carlos, again, good question. but you're asking the wrong question. So let's go along, watch a few of the trades, and then see if it makes sense. Okay? So we're looking at MRK. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down and then up. Okay, fine. All right, here's the bottom here. It's bouncing off that bottom. It's pretty clear to see. You might not be able to see it on your phone or your iPad, but the screen behind me, just the screen, not me standing in front of it, just the screen is live on YouTube, The 10-Minute Trader. Okay, go to The 10-Minute Trader, look at live videos, and you'll see this. And you'll see also, you see 2 live videos, just the screen and then me standing in front of the screen. Okay, so you can take your phone, go into the other room, pull up the big screen TV, go up to YouTube. Hopefully you have that on your cable choices. Anyway, let's keep on going because we haven't done anything yet. You guys keep asking questions. Hold the phone. So, top, bottom, let's take a look at the other charts. Okay, high, low, was, is, blah, 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 all that stuff. Remember I said I like the 90-day? Well, here's the 90-day. Now, why do I go from the 1 year to the 90-day? Well, the 1 year tells me where the high for the year is, where the low of the year is, and what direction is the stock going at this moment. Well, the 90-day, which is the last 3 months, gives me an idea of what kind of patterns there are. When I say patterns, there are a lot of us out here, buyers and sellers. Maybe not here in this channel, but look at this. 11 million shares traded today just on this company. So yeah, there are a lot of people out there looking at Merck today. Okay? So 90-day, looking at the exact same thing. 5 things. High, low, was, is. Look at the direction. Up, down, up, down. Now it's going up. 1, 2, 3. 3 days to the upside after this bottom right here. Okay, you've heard it over and over and over. Buy low, sell high. You cannot, I repeat, you cannot get any lower than the low of the year. And there it is right there, the low of the year for Merck. So the question you should have, well, number 1, does it make sense? Number 2, do I like Merck? Number 3, is this something I want to buy at this price? Hold on to blah, 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 blah. What stock is this? Merck, MRK. All right. Yes, I know Merck pays good. So this is the last 90 days. Gives me a good idea what's going on. Well, now I want to shrink it down and look at the last 30 days. Because what's important to me is knowing ahead of time where the stock is going. Okay, where's it going next? Well, isn't that something we want to find out? Well, here's the thing. If the stock is a dividend stock, just before they pay out their dividend, stocks have a tendency to go up. Well, if the stock increases just before the dividend, that's a great thing to know. All right, well, what trade do you make? That's a good question. Well, simple, safe, predictable trade. The covered call. It's simple, it's easy. Now, this is the last 30 days. Same thing. 5. High, low, was, is. Look at the direction. Up, down, up. That is so simple. Where does it look like it's going? It looks like it's going up. Okay, stocks go up until they're done going up. Guess what they do then? Then they go down until they're done going down. When they're done going down, they turn around and go back up again. Isn't that freaking crazy? Think about it. It goes up, it goes down, it goes up, it goes down. Well, what did it do last week? Well, last week it went down. Well, now it's going back up again. Great opportunity to jump in if you like this company. And it's always going to come to that. Do I like this company? That's it. Do I like this company? Great. Now, do I like this company at this current price, $77.23? Because that's the current price. All right. So beyond that, let's do a covered call. Oh, wait a minute. I said the seasonality too, didn't I? I said the seasonality chart. Well, let's take a look at that one. All right. I'm going to stop this for a minute because I'm missing some of these questions. And I don't like missing questions. Sir, help me. Yeah, that ain't going to happen. All right. We're going to do a covered call. Remember I told you I'm going to show you a few trades and show you exactly how it works? Well, here we go. What's the price it's going to? Currency D. How are you today? Currency D, I'm not trying to predict where it's going to. What I'm doing is looking for a simple, safe, predictable, consistent trade that I can make that will earn me 1% every single week. Okay, so sit tight. I'm going to show you which trade I'm going to do, and I'm going to explain to you why I'm doing it. But you got to understand one thing, and this is huge. You really got to understand this. I'm retired. I have no desire to go back into the workforce. I've been working since 1973. I think I'm due to retire if I feel like it. So I cannot and I will not take unnecessary risks. I will not lose any of my money if I don't have to. Now, I've done over 1,000 trades so far this year, and I only have 2 losses. I think that's pretty damn good, in my humble opinion. Okay? Are covered calls better when the price is consolidating, but the call premiums are getting juiced? Okay, a rubber band trades. I want you to listen closely, see if you can understand this. Okay? The trading strategy I'm showing you was created for a 9-year-old. Some questions just don't occur to a 9-year-old. The strategy is simple. Okay? It is so simple. 5 rules. Simple, safe, predictable, consistent, and no way to lose. It was created for a 9-year-old daughter when she asked me, Daddy, what are you doing? Can you teach me? Okay, 5 rules. Never buy something that doesn't make sense. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And then make sure the number's right. We're about to get to the numbers if you guys just stop asking questions. All right. Is covered calls when you actually have shares? Yeah. Gotcha. Thank you. Okay, so it looks like it's going up. It looks like it's going up. Now, could it go down? Yeah, it could. But think about it, okay? There's 11 million shares that traded, which means there got to be a lot of people looking. So as the stock gets to a high, people like me say, wait a second. Okay, here's the bottom here, 76 to 86. That's a $10 increase. A $10 increase on a $76 stock at the moment is more than 10% increase. Okay, great. I'm taking my profits. What happens? The stock drops. It drops until it's done. Once it's done, people like me say, wait a second, Merck at 74, yeah, I'm going to buy some. What happens? The stock goes up. And it will go up to a point where people say, ooh, 5%, 10%, I'm taking my profits and running. That's what we do. That's why we're here, to make a profit. Sir, okay, what do you think about Roth IRA? Okay, 3A Ghost, I don't give advice on how you should hold your account. Okay, all my accounts in corporate accounts, so it gives me a different playing field, so to speak. Never buy options. Sell it. Thank you, Trevor. Eat the decay. Okay, interesting way of looking at it. So we're going to do a 77. Wait a minute. We're going to do seasonality first. Now, before we do that, let me briefly explain to you what seasonality is and why it's important. Okay? Stocks move for 2 reasons and 2 reasons only. What do we got to have here? So, if your contracts expire worthless, you buy the shares so you don't lose. Nope. B, not at all. Okay? Sit tight, B. I'm trying to explain it one step at a time. You're a couple of steps ahead of me, and that's not correct. I'm going to show you correctly in a minute. Hold on. Okay, stocks move for 2 reasons and only 2 reasons. Reason number 1 is called an unknown reason. That's what it is, an unknown reason. Well, the second one is a known reason. Either we know why it moved or we have no clue. That's it. We know or we don't know. Simple. Okay? Unknown reason. Hurricane, tornado, flood, act of nature, a lawsuit came out of nowhere. Okay? Those you cannot control. When the Exxon Valdez crashed in the Northwest, nobody knew that was going to happen, but the stock went down. Okay? British Petroleum sprung a leak in the Gulf. Well, nobody knew that was going to happen. Stock went down. Nobody knew Apple was in a lawsuit and had to pay billions of dollars. The stock went down. Certain events create the stock going down that we don't know and we cannot plan for. That's called an unknown event. Okay, so what is a known event? A known event is something you can set your calendar by. Okay? Dividends, that's a known event. Earnings report, that's a known event. Christmas, that's a known event. New Year's, Easter, Thanksgiving, Labor Day, Memorial Day, the coming of summer, the coming of winter. Stocks react differently different times a year. Also, different events. A dividend will send the stock going up, usually going up. After the dividend is paid, the stock usually comes down. Okay? Earnings reports. That's a 50-50. I've seen positive earnings where the stocks go down. I've seen negative earnings and the stock go up. So I don't like using earnings reports because they're too unpredictable. But dividends are more consistent. Okay? Because dividends coming, stocks have a tendency to go up. Stock has a tendency to go up, great. What kind of play do you make? Well, I want something simple, safe, and no risk. Well, that's the covered call. And we're going to show you a couple of them in a second. But here is a seasonality chart. Okay, January 1st, way over there, December 31st. This is the whole year. Now, the blue line represents the movement for this year, 2025. The red line is 10 years of data, which is 2015, 2016, 2017, 18, 19, so on and so forth, 10 years worth of information. So it gives us an idea of how the stock moves predictably. Look at this right here. The beginning of the second quarter, the stock has a nice jump. Well, that's awesome. That's nice to know. So what do you do with that information? Well, besides the point, we'll get to that another day. But here we are right now. This blue dot, that blue dot right there represents today. This is the movement this year. This dot is today. Great. So I want to see what's happening next. So I'm going to blow up this area here to get a better view. So I'm going to take my cursor right on the blue dot, left click, drag right. When that gray bar opens up, here we go. Well, look at this. Okay. Now that's pretty plain to see. Merck has a tendency to go down at this time of year. Okay, for about 1, 2, 3, 4 weeks, and then it goes back up again. Doesn't sound like something I want to do, but here's the thing. Okay, that is not guaranteed. That's only history, what already happened. Now, there's something that supersedes that. Okay, it's like a trump card. Forgive the word. Some people get that Trump derangement syndrome, but it's just a word saying something supersedes it. It just has more meaning to it. And that is called the motion of the ocean, or also known as the trend. Okay, trending up, trending down, now it's trending up again. Okay, this, what's happening now, what happened yesterday, the day before, today, all that means more than the seasonality. The seasonality just gives us an idea of what's happening. I love when Trump says bye. Best believe. Okay. All right. Yes, I am starting and stopping way too much. Yes, I get that. People keep asking me questions and I don't want to be rude. All right. So let's do a covered call on this because I like the way it looks. Okay. Now, I said we're going to do the 77. So first thing I want to do is I want to change the strategy. I don't want to just buy it. I want to do a covered call. Okay, right there. Covered call. I'm going to click on that. It changes everything. All right, there you go. Now, remember I said I want to do the 77? Well, the 77 is right here. Okay, the strike prices, here's the 77 right there. All right, so I want to buy it right there. And there it is, popped up in green. So let's change it a little bit because I don't want to do 10 contracts. I don't want to scare anybody away with big numbers. Mine's preset for 10. And I want to do a market order. Now, there's a reason why I want to do a market order as opposed to a limit order. The difference between the two. Market order fills instantaneously first thing in the morning. Okay, market opens at 9:30, 9:31, this will fill. Limit order can sit on the market maker's computer all day. He's not required to fill it. He can fill it if he wants to do. All right, so here's the trade. I'm going to read it. I always encourage people to read it so you can hear it to make sure you're doing it right. All right, buy one covered call of Merck, MRK, 100. That shows you that it's the weeklies, right? Weeklies. 23 May 25. Well, that's this coming Friday. 77 call option against the Merck, the stock at the market to open to open. It says it twice because we're opening 2 orders. 2 orders. We're buying the stock, that's 1 order. we're selling the option. That's order number 2. Look at it this way. Stocks are traded in New York, options are traded in Chicago. So one's going this way, one's going that way, but they all meet back in the middle. And the reason why I do market order is because the option and the stock are tied together in a covered call. Remember when I said predictable? I want to know exactly what I'm going to make before I do it. Well, if you buy the stock, you have to wait for it to move. If you do a covered call, you already made your profit. I already know what my profit's going to be before anything happens. Okay? Maximum profit, $135 per contract. So if I do one contract, it's $135. If I do 10 contracts, that's $1,350. So you figure out what your portfolio has and invest accordingly. So let's continue. So there's my profit right there. What's the trade costing me? Cost of the trade, including commissions and fees, $7,500. Now, you never lose that $7,500. That's an investment. You are buying a part ownership in this company. You now have a viable asset. 100 shares is a viable asset, which allows you to sell one covered call every single week. Now, let's look at the numbers. Exactly what is it? Okay, for that we need the calculator. Now, I take the profit, 135, throw it into the calculator, 135, and to figure out what my rate of return for the week, for 1 week, okay, I divide it by my investment, 7,565. 756. Damn it. Let's try it again. Hit the wrong button. I always tell people, I do, honestly, I tell people, most beginners are going to lose money by hitting the wrong button. What did I just do? I just hit the wrong button. All right, try it again. 135 divided by the cost of the trade plus commissions and fees, 65. That comes to a grand total of 1.78%. Okay? B, Elliott. Tesla, no. PLTR, double no. SPY, triple no. QQQ, you hit the hat trick plus. No, and hell no. B, do me a favor. Do yourself a favor. All 4 of those companies you just listed, go into whatever financial website you like and tell me how consistently has each one of these increased their dividends. I'm talking increase. Okay? Higher. Tesla, no. PLTR, no. SPY, no. QQQ, no. They just don't fit for this strategy. Okay? All right. So let me keep on going. So 1.78% for 1 week. Do you have any idea what that means? What's your investment strategy in a nutshell? It's called the dividend capturing 2.0. I buy dividend stocks with the intention of selling covered calls against them in order to accumulate 1% on a weekly basis. Simply, safely, predictably, consistently, with no way to lose. That's the strategy in a nutshell. D'Amato, good evening. Gary Plum, stock split is also a known. Yep, Skull Bowl, 52% is not bad at all. Okay, D'Amato, I tried a market buy right order on Thinkorswim this morning, exactly how you show it, but it failed because it was 9:20 a.m. Do I have to wait until the market opens before I set the market's order? Absolutely. You can't do a market order before the market opens. You can do a limit order before the market opens, but you can't do a market order. You got to wait for the market to open. Vinaak Katol. Hi, what do you do for a living? I'm retired. I do as little as possible. You doing Walgreens this week? Nope. Walgreens had a buyout offer a couple of months ago. Ever since then, the options just weren't the same, wasn't worth doing. So we sold all our Walgreens quite a while ago. Gotta be time consuming, or can you set reoccurring purchases? Skull Bowl, you're new here. Sit tight. What's the reason you do market at open as opposed to waiting when the market price is lower? Like at lunchtime? Say B. Awesome question. Actually, it is. It's a great question. The reason is because I no longer pinch pennies. Okay, I at some point in time, money no longer has the appeal as it does when you were younger. So I'm 61, going on 62. I'm retired. I don't work anymore. I don't quibble about pennies. If I can get 1% every single week, well, an extra 2 or 3 pennies is not going to really matter. Okay, yeah, it will, but you're trading your time for money. So what do I mean? It's like, well, if I do my orders, if I do all my trading, 10, 15 minutes first thing in the morning, well, I have the rest of the day to do whatever I want. Why would I want to come back to the computer at lunchtime to do the trades then? Well, then now my whole day's been chopped up in pieces that I don't really like. Do you do comedy? I would love to do comedy. Love to stand there and just some of the wisdom that I collected over the years. I think I'd be funny as hell. Some people would be offended. Do you remember when Eddie Murphy, first thing he says, for all y'all who get offended easy, you might as well get the fuck out now. Sorry, some of you may have seen that. Eddie Murphy did a comedy skit back in the 80s called Raw. Eddie Murphy, Raw. Yeah, very first thing he said, for all y'all get offended easy, get the fuck out now. Anyway, okay, right. In your case, I can see that then. Okay, B, you like that? Okay, I'm 61. No desire to go back to work. 1% every single week gives me over 50% per year. Perfectly fine to take care of all my monthly obligations, and it gives me a little bit extra to hang out with my kids and my grandkids and do fun stuff. Okay? I don't need to buy a Lamborghini. I don't need a mansion. I don't need all that, show me crap. Nope, don't need it. Okay? I'm a simple man. I like things simple, easy. I like to be, what do you call that? Someone in the background. The rich dude in the background wearing sneakers and t-shirt. Damn right. Thanks, Laurie. What timeline do you have the seasonality chart? 10 years, Scotty. MJR, what about those gold mining companies? Okay, you tell me a gold mining company that's been profitable for 2 decades, and I'll take a look at it. Okay, I've been doing this long enough. You give me a stock, and I can tell you whether or not it's going to be a yes or a no. Very rarely do you come up with a company that I do not already know that has weekly options and 20 years of increased profits. Good, give me a try. I'll show it to you. I don't mind. B, as soon as you gain 1%, you sell. I think you said 1%, right? Yep, absolutely. Mac, I bought AT&T and Verizon when they were low and made a fortune on them. Alrighty then. Well, Mac, I didn't. 1% minus taxes is less than 1%. Money, I love the way you count. Because think of it this way, okay? 1% compounded annually is over 64%. I think it's closer to 70%. But besides the point. But here's the thing. You pay taxes once a year, okay? So if I make 50 to 60% return on my money, if I have my account set up properly, which I always suggest people to get with a tax planner, okay? Get with a tax planner to show you how to legally not have to pay taxes. Okay, that's up to you. It's your responsibility to set up your trading account however you do it. Okay? Strategist, thank you. Tax strategist. Chat with a tax strategist. They will show you how to set up your trading account where you don't have to pay taxes. Okay, so if Warren Buffett can pay less taxes than his secretary, okay, Bill Gates pays less taxes than his secretary, there's got to be something to it. So find a good tax strategist to show you how to not do that. All right, are all your trades covered calls? Yeah. So Rick will persist. Here's the thing, Rick. I grew up in the 60s, 70s, and 80s. We have something that's called a motto. If it ain't broke, don't fix it. If it works, leave it alone. So if I get 1% every single week, why would I change it? Seriously, think about it. Why would I change it? It takes less than 10 minutes. Why would I change it? You are not Warren Buffett. I never said that I was, but thank you for reminding me. Mac, you have to pay capital gains tax. Mac, no, you don't. If you have your account set up in a manner in which you don't have to pay taxes, you don't have to pay it. Now, I'm not telling you to do it the way I do it. I'm telling you to talk to a tax strategist. You can offset your losses against your gains. Absolutely, you can. Seems like secretaries are just really bad at taxes. No, because the absolute highest tax you can possibly pay is earned income. That's the highest. Earned income is the highest tax out there. Okay? The tax code is set up for business people and investors. Can you look at my recent question you missed? B, is your goal is to not stay glued to the computer, phone, or do you set a self-fill? Oh, no. Okay, so B, I've been doing this for over 20 years, okay? Now, I have a firm belief that your money is almost like your children. You gotta feed them, water them, have a house, for them to be safe, all that kind of nice, neat, fun stuff. If you have pets, you gotta feed them and water them every day, okay? If you have plants or a garden, you got to feed and water it every day. So why is it that people don't tend to their money every single day? He's wrong about the tax thing. You have to pay taxes on gains. Mac, no, you don't. Okay? If I have a company that loses $5 million every single year and my investment brings in $4 million every year, well, profits on one can offset losses of another. I don't have to pay taxes. Or if it's in a family trust, no taxes. If it's in a 503c corporation, what was that called? A nonprofit organization, you don't have to pay taxes. There are a lot of ways you can invest your money without having to pay taxes. I don't do taxes. I don't talk about them. There are other people that do. Okay, tax strategist or tax planner, figure it out. That's a charity. No, Mac, it's not a charity. It's a nonprofit organization. Okay, take a look at all the NGOs that are coming to light. Those are nonprofit organizations. Let's keep on going. All right, so let's finish up what I was saying. 1.78 per week is over 70, 80%. Let's just figure it out. Multiply this times 52, that's 52. 92%. I can deal with 92%. But my goal is 1%, which is 50% per year. 92 is even better. He is funny. All right, let's keep on progressing. So that's Merck. Love Merck. I actually own some Merck. Okay, and yes, I do a covered call on Merck every single week. All righty. So what else we have here? No, I don't trade futures. What if the call gets assigned? If your call gets assigned, then you weren't doing something properly or it was time for it to get assigned. Every single morning, we look at a few things. Number one, what did I buy the stock for? Number two, what did I sell a covered call for? Those are the first two things I want to know. Then I want to know, what's the stock at now? What's the option value at now? Am I at risk of being called away? Am I winning or am I losing? Okay, these are questions we ask every single day. It's not that difficult. I wish I knew more about tax codes and brave enough to lower it. Oh, because I know. That's a charity. Same thing. Because I know. Mac, what is it you know that I don't know? I'm literally a CPA. Awesome! That's exactly the person you do not want to talk to when you're doing your taxes. A CPA. Because they teach you how to fill out a tax return. They do not teach you how to avoid legally paying taxes. You're right about that. Absolutely. As a matter of fact, Mac, I could take all my paperwork and give it to 10 different CPAs, and I'm pretty damn sure I will get 10 different answers. Yep, CPA is just what they teach you in the school. Yeah, I get that. They teach you what they want you to know. That is it. If you look deep into that stupid little book, you will see, false? Oh, hell, shit, no. Look in the book. It will say the taxes you pay are not taxes. They are a gift you give to the IRS. Look it in. It's in there. Also, what's in that book is voluntary compliance. Okay? Voluntary compliance. You can look and case. I'm not even going to do it. I told you I wasn't going to do taxes. Stop it. Okay? Okay? I've been doing this long enough, and I really honestly don't care how long you are a CPA. I know for a fact CPAs are taught what they want us to know. That's it. Okay? I said do not go to a CPA to avoid paying taxes. You go to a tax strategist, okay? A tax strategist or a tax planner. All righty? Now, Mac, I stood quick. I'm here for the stocks, not tax. Thank you, stood quick. So let's stick with the stocks, get away from the taxes. Okay? The first thing, anytime you want to talk about taxes, the first thing you want to ask who's ever doing your taxes, how much taxes do you pay? Thank you, Stuart Quick. Make money first, and don't worry about taxes. Mac, someone who just makes it up then is better than someone who knows the law. One more thing, Mac, and that's all I'm going to say. Okay? One more thing. It's not tax law. It's tax code. Remember that specifically. That IRS book is not tax law, it's tax codes. That's it. Remember that. Anyway, let's move on. I don't want to talk about taxes anymore. Mac, one more thing about taxes. I'm gonna remove you. Okay? I don't want to do it. I say simply, I don't do taxes. Okay? Figure it out for yourself. Tax strategist or tax planner. Okay? All right. He didn't want to listen, so I got to block him. I don't like blocking people. I don't. Okay. Elliot, all this taxes talks is too taxing. That's funny. All right. All right. So that being said, let's move on. Oh, again, if you're worried about your taxes, go talk to a tax strategist or tax planner, not a CPA. CPA teaches you what they want you to know, and that's not what you want to do. All right. So as I was saying, 92% on Merck. Let's just stop all the questions. Just go to the stocks. We're what? 1142, and we've only looked at one. That's crazy. 1142. We should have looked at 20. All right. Back to here. Okay. Now, let's cut out the questions and let's go take a look at stocks and which ones look good. So Merck actually looks good. I like Merck. Okay. You were talking about being assigned. Yes, B. All right. So when it comes to a stock option, you're selling somebody the rights to buy it from you at a certain price. Okay, if the stock goes up and somebody wants to take that stock from you and you made your profit, let them take it or roll it into the next week. If you roll it into the next week, make sure you get more than 1% for it. How is Coinbase looking? Coinbase is not a dividend stock. Sorry, dividend stocks only. Oh, do I like Duke Energy? DUK. DUK. All righty. Dude has no life. Arguing with you is so annoying. Yep, I hear you. Old dogs in the house. All right, let's keep on going. All right, Rick will persist. Are all your trades covered calls? Yes, they are. Big Cheese. Do you only like dividend stocks because they are reliable? I love the way you phrased it. Do you only like dividend stocks because they're reliable? Think about that. If they're reliable, why not? The dividend's part of the strategy. Yep. I've never rolled it before. Can you explain when you get a chance? Yes, B, I'm going to show you in a minute. Let's look at a few more stocks so we get to get through some of this list. This list is kind of big. All right, let's keep on going. Next on the list is U.S. Steel. I love U.S. Steel. I actually bought me some. Do you sell in the money covered calls in the strategy? Sometimes I do, Hex. It's always going to be about the numbers. What am I buying the stock for? What covered call is the simplest, safest, closest, and is it more than 1%? It's actually that simple. It's a mathematical equation. It's either yes or it's a no. There's no ifs, ands, and buts. Okay, U.S. Steel is next. U.S. Steel. Here we go. Oh, MRJ, what's that? MJR, Ford. Now, we watched Ford increase 6 weeks in a row. All right, so U.S. Steel. Remember, I told you 3 to 4 seconds. high, low was, is, look at the direction. Up, down, up, down, up, down. Well, we're right here at 41.62. All right, what does that mean? Well, it doesn't really mean anything. But we'll go to number 2. Ready? Number 1 is looking at the 1-year chart. Number 2, look at the numbers. Currently, 41.62. So the closest covered call would be 41.50, which is right here, which is $2. Now, $2 on a $40 stock is over 4%. Well, hell yeah, I want to take a look at that one. Nope, I don't trade futures. Sorry, I traded futures years ago. Okay, it's just not as easy as dividend stocks, some strange reason. How long are you holding your positions for on average? A week or 2. Okay, they're big cheese. All my positions are profitable from day 1. Okay, I have a different strategy. You're new here, so sit tight. Scotty King. Ooh, KHC, Heinz Ketchup, has made a 30-day low and had 3 days of lower highs and pays 5.7% dividend. Would you like to look at that one? Yes, I will, Scotty. KHC, Heinz Ketchup, KHC. All right, we'll take a look at that in a little bit. All right, so let's look at this chart a little bit better because the numbers look great for U.S. Steel. Now, just to let you know, I do own a bunch of U.S. Steel because the numbers just look great consistently. Terry, how are you today? All right, so look at this. Up, down, up, down, up, down. Well, look at where we are right now. Okay, I just bought some U.S. Steel yesterday because I like it at 41. Okay. Kyle, give me 1 second, I'll answer that question. So you just sell the contract and hold the stock? Absolutely, big cheese. I hold the stock. I own the stock. Every single week, I sell a contract, a life insurance contract, not a life insurance contract, sorry, a stock option contract. It's still a contract, okay? For contract, you need 4 things: beginning date, ending date, consideration, that's the money, and then the agreement or meeting of the minds, which means I'm selling, you're buying. Okay, I'm selling at this price, you're buying at this price. Here's the beginning date, here's the ending date. That's the agreement. I'm buying at this price by this time. And then you pay me money. That's the contract. 4 things: beginning date, ending date, consideration, and the agreement. Okay? So yeah, I just said it. Check out NVO, pays 3% dividend and at a 5-year low, and they have Ozempic. I have no idea what Ozempic is. Okay, I'm 61, I take no prescriptions whatsoever. So you can tell me all these weird names. I have no clue whatsoever, except for I hear it on the news. But you want to take a look at NVO? NVO. We'll take a gander at it. Might take a while. Have we looked at Pepsi? Not yet, Tara. It's on the list. All right, let's go back to this. A year ago, U.S. Steel is at 36.65. The bottom of the year is the beginning of September. That was 26.96. The top of the year is 46.13. That was on the first week of April. Well, what happened since then? Okay, it came down, it went up, it came down. Now what is it doing? 5 down days in a row. Last Monday, Tuesday, Wednesday, Thursday, Friday, and today she's starting to go back up again. Well, awesome. Great time to jump into U.S. Steel. Well, the 41.62 is the current price. The 41.50 is 207. Let's take a look at covered call on U.S. Steel at 41.50. All right, so let's get rid of this. Let's go covered call right there. The 41.50 right there. 1 contract. You're going to love these numbers. I actually bought some of these the other day because the numbers look so freaking nice. Here we go. Buy 1 covered call of U.S. Steel 100. That's the weeklies. 23 May 25. That's this coming Friday. The 41.50 call option against the stock at the market to open. 251 is the profit. 3,800 is the investment. Well, let's take a look. Calculator. Clear that. 251, maximum profit. Okay, right here, see it? Maximum profit, 251. Now remember, I said I want a Simple, safe, predictable. I know exactly what I'm going to make before I even do the trade. When you buy a stock, you have to wait for the stock to move before you can sell it, and you have no idea what your profit's going to be. Well, here, I know what's my profit's going to be before I do anything. 251 per contract. So if I buy 10 contracts, that's $2,500. Now, am I throwing it away? No, I'm part owner of US Steel, okay, at $3,800 per contract. Okay, great. So 251 divided by 3,800. 251 divide 3,899 comes to a grand total of 6.4. I told you it was a big number. Okay, I saw this number yesterday. I bought a bunch this morning. Well, why the hell not? 6% to own US Steel. The company's been around for over 100 years. And yes, they increase their dividends consistently. Why the hell not? Okay. What's the worst case scenario selling covered calls? Like, how much can you lose? Okay, so user 3281. Okay, here's something you probably haven't thought of, and I mention this every single time. Most of you just starting out are going to lose most of your money by hitting the wrong button. Isn't that like the stupidest thing you've ever heard? Well, 15 minutes ago, I hit the wrong button. Okay? I actually hit a wrong button and lost $2,500 while all my traders watched me do it. And nobody said a thing. I'm doing a trade, click, 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 and I hit the button, and I was like, oh, fuck, I just lost $2,500. Nobody said a word. They just watched me hit the wrong button. It happens, and it's going to happen. Okay? Worst case scenario is you're going to do something you regret. Rule number 1, never buy something unless you plan on taking it to your grave or handing it off to your children. Okay? If you don't want to buy it and own it for the rest of your life, don't buy it. If you don't understand it, don't buy it. If it doesn't make sense, don't buy it. Rule number 2, never sell at a loss. Rule 3, make sure it's profitable. Rule 4, weekly options only, blah, 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 all that kind of nasty stuff. All right. I love US Steel. I do. So next, let's go to the next one. I got to write that one down. 6.4. That's a nice number. That's probably why I bought some this morning. BTU. What the heck is BTU, and why are we looking at BTU? I just got to get all out of all this. And let's look at BTU. What the heck is BTU? BTU is Peabody Energy. Okay, so why haven't I never heard of Peabody Energy? That's a question I ask a lot. I haven't heard of them. Well, why not? Well, let's go and take a look at, what is it? BTU. BTU. Is that right? BTU? Peabody Energy. There it is right there, $14. All right, 2018. 2018, 11 cents, 12, 13, $1.84, well, 14, 18, 19. That's not 20 years old. Okay, Peabody Energy only goes back to 2018. That's why I've never heard of it. I don't do stocks that don't have 2 decades. I want to go back to 2005. This thing ain't old enough. No, to BTU. Next, Dominion. Let's go take a look at Dominion. Now, Dominion is on the list, I believe. I think. Is it? Nope. I don't do monthlies. Okay? 20 June, 18 July, 19 September, 17 October. It means it trades once a month. No, thank you. He is... Oh, David bought BTU today. Cool beans. So sell the option off. Of course. The stock isn't a gain or a loss in profit. It's just an asset. Big cheese. Oh, man, I couldn't have said it any better. Okay? You're buying the asset, and is the asset giving you cash flow every week? When it goes up above what you paid for it and it doesn't make sense to roll it forward anymore, Let it go. And then jump into something else. I have about 300 companies that I look at. I will buy it and I will hold on to it. And when it goes up above, because it goes to a certain point where it just doesn't make sense anymore. Okay, I think that happened with Alcoa this week. Okay, so we bought Alcoa weeks ago and got 1% as the stock kept going up. So we tried to roll it this week and it just didn't give us 1%. So it was time to let it go, take the profits, and move on to another one. Simple. Profitable, take your profits, move on. The funny thing about profits, okay? Funny things about profits. Number one, it ain't a profit until you take it. Number two, nobody ever went broke taking profits. Isn't that weird? Nobody ever went broke taking profits. Iron Man, he's going over like this, like it's a free money, ignoring to mention any of the possibility of loss or risk. See, Iron Man, what I think about loss and risk, number one, I'm 61, okay? All my life, all 61 years, I've noticed certain things. Coca-Cola, Pepsi, ExxonMobil, Shell, AT&T, IBM. I can go on over and over and over again about companies that have been here a lot longer than I have. Companies that are over 100 years old. So what I'm trying to say, Iron Man, is I cannot picture a world where Coca-Cola no longer exists. Is it possible? Yeah, it's possible. It's possible for the earth to open up and swallow every single Coca-Cola out there so it disappears off the face of the earth. It's possible, but it's not probable. Same thing with Ford, General Motors, IBM, AT&T, Consolidated Edison. They've been in business for over 200 years. Do you think at some point in time we're not going to need electricity anymore? Do you think there's a time we're not going to drink Pepsi or Coca-Cola or brush our teeth? Because you got to buy toothpaste from somewhere, Procter & Gamble. Companies that have been in business for over 100 years. Okay, they've seen World War I, World War II, Korea, Vietnam, all the crap on the what do you call it, the desert places. Okay, Afghanistan, Iraq, Iran, all that crap. These companies have consistently seen a lot of crap. The crash of 29, the crash of 87, the crash of 2000, the crash of 2008, the crash of 2021, and they're still increasing their dividends. What does that tell you? That tells me there's no risk there. For me. Now, there is risk. I mean, it is possible. It is for the world to open up and swallow every single Ford sign or, every single Ford car, every single Ford dealership, every Ford manufacturing company. It's possible. It is. But it's not probable. Okay? I like consistency. I like safety. Now, a lot of you guys here are younger than me. A lot of you are still working. Okay, I'm 61. I'm retired. I have no desire to go back to work, which means I cannot afford to be wrong or take chances. Okay, nobody's coming to my rescue. Okay, if I lose all my money, there's nobody's, don't worry about it. Here's some more. That doesn't happen. Okay, so I got to make sure I'm right. And I got to make sure I don't lose. That's why I do a strategy that's simple, safe, predictable, consistent, no way to lose. That's it. Holy crap. We're at 11 o'clock. We got a half hour to go. And I got a whole bunch of questions to answer. Okay. No more questions. Let's keep on doing some stock. Dominion is a no. I don't do monthlies. The numbers just don't work. Please don't ask me why. Just trust me when I say the numbers just don't work on monthly option stocks for me. If they work for you, great. Okay. Aaron, if you would like paying taxes, go with Zim dividends. Okay, thank you. Kyle, you just trade the same group of stocks and just roll each week. Well, Kyle, if it works, leave it alone. Okay? If it ain't broke, don't try to fix it. Okay? I post each and every single one of my trades. You can take a look for yourself. What I bought it for, what I sold it for, what I sell every single week against it in order to bring in cash flow. That's my goal, 1% every week. Okay, let's keep on going. Big Cheese, you guys want a 100% sure bet? get the highest interest rate savings account that is investing. Holy cow. Hey, have at it. I see some savings accounts paying 4% a year. Now, if you can live off of 4% a year, hey, be my guest. Doesn't work for me. First time I to get to know more. Oh, all right. What's your advice on prop firms? I've looked at it. I haven't done it. What can you say about ICT strategy? You have to explain to me what that is, ICT. Okay. All right, so let's keep on moving on. My stocks that pay high dividends. Okay. Oh, let's come back. You aren't gone over loss scenarios and how to deal with it. You have to lose to win. I'm not quite sure I understand that, Iron Man. I sell covered puts and are clearly overreacting. Okay. Brad, sorry, I joined late tonight. What is your lock for this week or next? Love your system. Thank you. I did a lot of U.S. Steel. That was cool. Win and losses. What is your trade rate? What is my trade rate, Carlos? I lost twice this year. Two losses. I traded almost, I'd say close to 800 trades this year. 2 losses out of 800 trades. I think that's pretty good. Young, what's the best amount of money to start with? Everyone's different. I can't answer that one. Iman, let's say your covered loss goes down a lot. What's your plan the following week? Oh my goodness. I love it when people question me. I really do. It shows me you're paying attention. All right. Iron Man, you ready for this? Let's get over here. Let's go right here. Let's go to this account here. Let's go here. Let's go Harley-Davidson. Are you ready? Harley-Davidson, view trades. Here we go. Harley-Davidson, I bought 1021. That's October 21st, 2024 at $35. See that? Harley-Davidson, 1,000 shares at 35, 1,000 shares at 35, and 200 shares. So I got 2,200 shares at 35. Okay? Right now, the stock is trading at 25. Now, I bought it at 35, but now it's at 25. Am I panicked? No. Why? Well, Harley-Davidson's been in business for over it's been in business for over 100 years. They are an American icon. You cannot buy the name recognition that Harley-Davidson possesses. You just can't do it. Same with Macy's, same with Ford, same with General Motors. And they're called an icon. Anyway, so if I'm down $10 on the stock, do you see this right here? Look closely because you might not notice this. You ready? This week, see, 23 May, which is this Friday, I sold the $23 call option, 22 contracts at $2.13 per share. So let's do some math. Okay, so 22 contracts, one contract's $100, so 22 is $2,200. All righty, so let's clear this. 2,200 contracts, all right? And I collect, what the hell did I collect again? Where the hell is that? View trade. Okay, $2.13 per share. Okay, see that? $2.13 per share. Calculator, all right. So 2,200 shares multiplied by $2.13. Okay, do you see that? $4,686 just on that one trade. So hold on, not done yet. Now, let's add that there so we remember that one. Now, remember I said I got 2,200 shares, 2,200 shares at $35, okay, multiplied by $35. So my investment into Harley-Davidson is $77,000. But this week, just this week, I made 46. Okay? Just this week. 4,600. I showed you the trade. It's there. Okay? So 4,600 is the profit. What did it cost me? 77,000. Okay? Divided 77,000. Okay? Now, do you see that? 6%. Just on Harley-Davidson this week. And the stock is down $10 from what I bought it for. I bought it at 35. It's right there. Okay? Okay? Harley-Davidson, 1021. 1,000 shares, 35.62. Okay, so I got 77,000 tied up in Harley-Davidson. This week I made 4,500. That's 6% just for this week on Harley-Davidson. What else do I have? Well, Alcoa, Devon Energy, Hertz, Kohl's, Macy's, Riley, Riot, and U.S. Steel. The numbers are there. How many losses are unrealized? How many losses are unrealized? It's an interesting question. Okay, so here's the trades as of this year. Number one, Kohl's. Okay, I am down $26,000 on Kohl's, but I still own it. Do I have any intention whatsoever in selling? None whatsoever. I will take it to my grave, but every single week I'll write a covered call on it, and it gives me money every single week. Okay, next one, Macy's. I'm down $16,000, but I still own it. Okay, Riley. It's down, but I still own it. Altria. Okay, this one is actually a loss. Remember I told you I have two losses? Altria is one of them, right there. Altria, where is it? Right here. So, I lost $1,900 on Altria this year. It's my only loss in this account. Okay, I've done all these trades. Oh, hold on. Let's go back to January 1st. Okay, January 1st. Okay, you paying attention? January 1st, 2025 to May 19th, 2025, which is today. Let's see how many trades there was. Okay, do you see that right there? 200 filled orders. 200 orders, 394. That's just this one account. Remember, I told you I have 7 accounts. This is just one of them. Okay, every single one of these trades, and no, red is not bad, red is good. Okay, you'll see green and you'll see red, the only two colors. Green is buying, red is selling. Okay, credit, 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 credit. Those are all profits. Okay, these are all the trades I made just in this one account this year. Over 200, just in this one account. And out of those 200 trades, I have one loss. And that's it. Okay? Those are all the trades in this one account. And this goes to March 31st, March 17th, March 10th, March 4th, March 3rd, February 28th, February 25th, February 20th, February 11th, February 7th, February 2nd, February 2nd, January 31st, January 28th, January 16th, January 14th, January 7th, January 6th, January 2nd. There you go, all the way back to the beginning. Okay, that's over 200 trades, and I only have one loss. So my win rate, I'd say less than 1%. So it is what it is. Can you do an example with a little cheaper stock? I'm still learning. Absolutely, Rick, give me a second. B, I've been doing options since 2020. I don't get the Harley-Davidson example. You don't get the Harley-Davidson example. Hold that thought for a minute. So basically, you keep holding the stock, keep selling the contracts at lower strike prices. Yeah, you caught that pretty quick. So because you own the shares, you gave away some of your shares as option contracts? No, I don't No. See, an option contract is nothing more than doing someone a favor. Let's look at it that way. Let's say hypothetically you have a car in the backyard, you push it out to the front. Now you slap a for sale sign on it, $5,000 for this 1969 MG midget. Okay, whatever, $5,000. The guy Tom down the street says, hey, I like your car. Let me give you $500. Hold it for me until Friday. That's it. Hold it for me until Friday. If I want to come back on Friday and buy it, I will give you the additional $5,000. That completes the sale. If he doesn't come back, you keep that $500, and then the next Monday you sell it to someone else. The same thing. Okay, somebody gives you money. Consider it as a non-refundable deposit. Okay, you put the money up. On Friday, you have a choice. You buy it or you don't. If you don't buy it, you sell it to someone else on Monday. You do that every single week. So Iron Man, who said it? B. You don't understand the Harley-Davidson trade. I don't know why you don't understand it. It was pretty. Okay, let's go to Harley-Davidson. HOG. Harley-Davidson trade. Let's go there. All right. At this moment in time, B, are you ready? Harley-Davidson is at, okay, the high, the low. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up. It's at 25.35. The currently at 25 right here is going for 65 cents per share. 65 cents per share. Okay, let's see what it plays out as. I'm not going to go off this crap. See, look, it's going up. It's on an upward trend. Wonderful. Okay, let's get rid of it. Okay, covered call on Harley-Davidson right there. The 25 right there. And one contract right there at the market right there. And here we go. There it is by one covered call, Harley-Davidson, blah, blah, yada, yada. Profit's $35. The cost of the trade is $2,465. So let's do a little bit of math. Clear that. Dun. Okay, $35 divided by the purchase price, $24.65. Here we go. 1.4%. That's it. That's for this week, for 4 days. 4 days. Because you already missed Monday. Monday's already gone. You can't do that. Okay, so Monday through Friday, you got 5 days. Well, Monday's gone. That's 20% of your opportunity. Okay, after tomorrow, you're down to 60%. That's another 20% you lose. Okay, that's kind of what I was thinking. All right, B. Brad, how much to join your club program weekly basis? How many hours per week needed? Okay, Brad, here I try to not sell anything. It's just education. But if you want, okay, DM me with your phone number. I will give you a call. We will chat, and you have my solemn promise. I will not try to sell you anything. B, you get it now. You sell contracts. That's what I've been saying. Covered call is basically selling contracts. All right, so we're at 11:14. We got a whole bunch of questions to go over, so I'm just going to answer questions for now. Probably won't look at any more stocks because we're running out of time. Alrighty. Yeah. KHC. Oh, Scotty, let's do KHC. Okay, I'll do KHC, but I'm not going to do LPG. All right. So Scotty's been here. You asked about this for a while. Scotty always has something interesting to ask. So delete that. Go back to here. Back up to there. Back to there. And KHC. Kraft Heinz. I knew people did that, but never seen anyone actually talk about it. They just buy and sell options. Well, B, I don't buy options. 80% of all options expire worthless. I do not buy them, I sell them. Brandon, talk about how I can make money with UFOs. Ooh, we'll chat later. So step one is find a business that has been around for a long time. No, Kevin. Number one is pick your stocks. There's over 10,000 different companies you can choose from. Okay, we look every single week. Every single Monday, I check and see exactly how many companies have been added in the last week. So last week it was 10,036. Well, this week it's 10,043, I think. So 10,043. How do you pick? Well, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list, right there is 300 companies. All right. All right. KHC, Kraft Heinz. Ooh, check that out. Now, Kraft Heinz, if you didn't know, has been in business for over 100 years. They are a dividend king, which means they have increased their dividend payments to their shareholders for more than 5 decades. Now, some of you people aren't even 50 years old, but this company has increased its profits for more than 5 decades. Well, look at the numbers. Okay, high, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up. Okay, simple enough. Look at this here. 1, 2, 3. 3 times it would not go over 37. So safe to say that that is the blocking point, or that is the resistance. Resistance is where it won't go any higher. 3 times it hit it, won't go any higher. All right, what's down here? Oh, the bottom. Look at this. 1, 2, 3, 4. 4 times it wouldn't go below 27. Well, 27, 37. That's your range for the whole year. Well, that's not bad. That's better than some companies. But look at what she's doing. She's dropping. Now she's turning around. Remember one thing, and you'll hear this over and over and over again. You buy low, you sell high. That's how you make money in the stock market. Well, I tell you what, you cannot get any lower than the low of the year, and that was last week. Right there, the low of the year for a company that is over 100 years old. The low of the year was last week. It's a great opportunity to buy a company that has the what do you call it? Accolades that Heinz Ketchup has. All right, so let's take a look at the numbers. A year ago, 35.92. The high of the year, hit it almost 3 times, 36.50. Look at the low of the year. Last week, 27.12. All right, look at the last 90 days. Now, the reason why I look at the last 90 days, it gives me an idea of the motion. What is the buying and selling? Look at this, is pretty good. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up. Well, think about it, okay? It goes up until it's done, and then it goes down until it's done going down, and then it changes momentum, and it goes back up again. Well, last week was the bottom of the year for Heinz Ketchup. All right, well, let's take a look at the last 30 days. Okay, here's your last 30 days. Up, down, up. Come on, people. This was created for a 9-year-old. Okay, I have my grandson. He can show you. He's 5. Where's the top? Right there. Where's the bottom? Right there. What's the motion? Up, down, up. It's actually that simple. Adults have a tendency to make this more complicated than it needs to be. It's freaking exhausting trying to figure out why adults make things complicated. You can see it, the top, the bottom, now it's going back up again. It's Kraft Heinz. They've been around for over 100 years. What's hard to understand about that? To be able to sell them, you have to hold at least 100 shares. Absolutely. Okay? Thank you for the nuggets. All righty. Okay, whatever. Okay. That's where I have Fidelity. Think or swim. Okay. All righty. All right. So, Damien. What's that? Damani. Oh, Damani. UNH. Okay, we'll look at UNH tomorrow. Wait a minute. We might be able to look at UNH. All right. So, let's take a look at Kraft Heinz. All right. 28. Now, I'm going to look at the 28, and the reason being, the stock is at 27.88. Well, the closest strike price to 27.88, it's 28. Come on, everybody can tell that. 27.88, the closest whole number over here, 28. And it's going from 21 to 23. That's not quite 1%. So no. Now, if we had done it yesterday, we probably would have got 1%. Because, or this morning, I should say. Well, it's kind of considered yesterday. Okay? So had I done it this morning, I probably would have gotten 1%. But now I'm not. So I'm not going to do it. Because the numbers just don't work. All right, we're moving now. Let's go. Thoughts on UNH. Like 6 people asked me about this piece of crap, and I don't know why. UNH, University of New Hampshire. Here you go. All right. A couple of weeks ago, this thing's at 600. Now it's at 315. And you're all excited? Well, I can see why, because here's the bottom here. Now it's turning around, going back up again. Well, I like 3 days to the upside. Okay, 2 days I jump in. Day number 3, if it's up, great. Hold on. UNH a year ago, 521. The high of the year, 630. Well, look at the last 90 days. Okay, shoots up, big gap down, keeps going down, gaps down once, gaps down twice, 3 times. Big gap here, gap here, gap here. Here's the bottom, 250. $600 down to 250. Well, Friday was higher, today was higher. That's your 2 days to the upside. Can it do it a third time? Well, let's find out. High risk, high reward. Yeah, Damani, you're absolutely 100% correct. High risk, high reward. Now, I told you earlier, I do not have the luxury of being wrong. So I do not do UNH. Okay, if it's above $250 per share, no. I can get the exact same returns on a $5 stock, on a $10 stock. So why would I risk buying a $600 stock? But for those of you who like it, the last 30 days, okay, 30 days ago, here's your top. Here's your 30-day bottom. 2 days to the upside, well, day number 3 is tomorrow. If it's higher tomorrow, that is usually a good sign for me to jump in. I'm not going to jump into this. I don't buy stocks over $250 because I just don't. Okay? But the 315 is going for $9.40. All right, so it's going for 320. Sorry, 320 is going for $7.35. $7.35 is over 2%. But 2%, how much money do you have to invest? Well, a $300 stock, that gets pretty pricey. Eric, thank you. UNH under several investigations. Well, there's another reason why I'm not going to invest in it. Hogan, did you already look at Mara? Nope, Hogan, I haven't looked at it yet. I'll write it down. We probably won't get till tomorrow or the next day. M-A-R-A. Next on my list, Wally World. Well, we all love Wally World, don't we? WMT. Wally World. Ooh, look at that movement. Nice. Okay, 3 to 4 seconds. 3 to 4 seconds. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. It's going up right now. Great. Well, let's take a gander at it, see what it looks like. A year ago was the bottom of the year, 63.55. The top of the year, 105. That's almost doubled in price. Okay, that was halfway through February. She dropped back down again, went back up. The last 90 days, right there. Okay, here's the last 90 days. Okay, high, low, where was it? Where is it? Okay, down, up, down, up. Okay, easy to see, right? Okay, last 30 days. The last 30 days. Here we go. Up, down, up. Simple. Why do adults have a tendency to make things complicated? 30-day bottom, people start buying. Gets to the 30-day top, people start selling, taking their profits. It goes back down until it's done going down. And then it turns around and goes back up again. Well, here's your 2 days. I don't know if you want to count today as an up day, as a lower high and a lower low. So I'm not quite sure what you want to call that. Now, I already do own some Walmart, so I'm not really worried about it because the numbers are still within the parameters for a safe trade for me. All right. Let's see what else we got. How do you use AI in your system? I don't. I don't trust computers as far as I can. Throw them. That's why I write stuff down. Okay, who else we got? What do I think of crypto? Humongous. I love the idea of crypto. However, crypto is kind of like the wild, wild west at the moment. It's the new teenager on the block. Hasn't quite found its footing. No security, no consistency. For me, it's a no. Until there's a way for me to profit simply, safely, predictably with crypto, I'm just going to watch it. Okay? I love the idea of it. I think it's awesome. You can send money instantaneously, and you get the greedy little fingers of the Fed, bankers, businessmen, get them out of the equation. I think that's a great idea. However, there's still a lot of ifs, ands, buts, and bad stuff. All right, we got 4 minutes left, and I got a whole bunch of questions to go through. Just in night. Oh, interesting. Thank you. You're welcome. Laurie, free to download. Yep. Aaron, my stocks were taken away, although I was in the money. Okay, that's a good thing, I think. I do my own taxes. Well, that's a big mistake. You shouldn't do that. Do you have a book that teaches covered calls and how to manage them? Emmy, I've written 14 books. But here's the thing, Emmy. I tell people I do not sell anything here. Okay, we're all adults. We know if you go into the bio, there's all the stuff you can buy that I've done. Okay, I've written 14 books. I have all that crap, but I'm not trying to sell you anything. I do my company taxes and I do my trade taxes. Okay. I think book number 14 would be the best. Well, because it's the newest and it's most up to date. However, the first book gives you the baseline, the history, where it came about, gives you that understanding. I just trade the same group of stocks and just roll over each week. Kyle, that's a freaking awesome idea. It is, seriously. That's exactly what I do. For the most part, I do the same stocks over and over and over and over again. Because you're probably same age as me, and if it ain't broke, don't fix it. MJR Ford. Everything on the screen is backwards. No, Sean Carpenter, it's not backwards. It just looks backwards to you. Because you're on YouTube, and YouTube doesn't give the opportunity for us to reverse the camera, for you to see it correctly. Okay, the other ones are right. Kyle, having a stock called away gives you best returns. Absolutely. My stocks that pay high dividends. Alrighty then. Pup Dad, how you doing? Don, good evening. Don Polos. Suncor. Okay, Aaron, we'll take a look at Suncor tomorrow because we're running out of time. S-U-N. And I hope tomorrow you guys don't have less questions. All right. Abdullah, 2020 to 2025, and I'm still losing on binary option trader. I feel sorry for you, dude. Suncor is SU. Robert, yes, I know that. But thank you for reminding me. James Brochu, how are you today, brother? Ellie, good evening. OG Gamer, what's up? Mark the Fourth, Laws. Okay. David Trey, sorry, I missed this. What's the top three? David, I'm not quite sure the top three of what. Diedrich, good evening. Floats, AT&T. I love AT&T. It's 11:30. I quit at 11:30, so unfortunately, we're going to have to wait till tomorrow to do AT&T. What do I think about Core Wave? Well, I can tell you it's not 20 years old. and they're not consistently profitable for 20, they don't have 20 years. Sorry, they don't have 20 years of profitability as far as I know. Okay, Robert Suncoy got that one. Abdullah, and advice, sir. And advice, sir? I don't give people advice. I don't. I read numbers, I give my opinion. Okay, you give me a stock to take a look at, I'll take a look at it, and I'll tell you whether or not I like it for what I am doing. I can't tell you if it's right or wrong for you. That's a choice only you can make. Okay, and I don't try to sell anyone anything. Okay, checking in, OKLO, never heard of it, so more than likely it's going to be a no for me. If you like it, that's good. What's your advice to someone looking to break into profitability? Education. Ask questions until you understand them. What's my view on Bitcoin? I think it's a great idea. That's about it. Okay? There might be at some point, but there's no way to profit off of Bitcoin on a weekly basis consistently with no risk or little risk whatsoever. Also, Bitcoin has only been around for a few years. Okay, I'm looking at companies that have been around for over 100 years because that makes sense for me. Got some more questions. Aaron, upside potential is limited in exchange for immediate cash distribution. Okay, I'm not looking for upside. Aaron, see if you can understand this. Okay, I'm 61. At 61, being retired, I am not looking for upside potential. I'm looking for cash flow. Okay, so if it cash flows, great, I will do it. If it doesn't cash flow, I won't do it. What ticker is US Steel? X. Sell to open on Mantra. Yep. Are you an investment advisor? Well, not quite sure, Dana, what you mean by that. Do I give people investment advice? Yep, I do. CJB, C. Ooh, C is Citigroup. I love Citigroup. I like X also. It's a coal company. Righty. Just in night. If you are not busy, that is. Kind of busy. Anthony, lately the dollar has been losing value and people are looking elsewhere to invest. Gold, silver, etc. Do you think there's an alternative to the dollar in the future? Absolutely, there is. But here's the interesting thing, okay? The dollar is losing its value. Yes, we all know that. However, we are still buying and selling stocks in US dollars. Okay, so when the US dollar is replaced, if I own 100 shares of Walmart, regardless of what they change the dollar for, I will still own 100 shares of Walmart. What value they give it and what currency they do with that, is it really relevant? No, I own a portion of the company. Is the company going to disappear overnight? More than likely not. Is it a safe place to put my money? It kind of is. Now, somebody mentioned something, Anthony, about gold and silver. Well, gold and silver is a storage of wealth. That's like this is a storage of a liquid. Okay, storage of anything does not have cash flow. So if you take a bar of gold and a bar of silver and you put it on your desk, it's not going to give you any income. Now, if I have 100 shares or 1,000 shares of Walmart, every single week it's going to give me some type of return. Okay, Aaron Wood, loss and risk if stock drops. Examples, Macy's, Intel, Walgreens. Okay, Aaron, I get that, but I'm not quite sure the clarity. Oh man, the SEC would be pounding on your door if they heard this rant. Why? I haven't said anything illegal. I haven't said anything wrong. That is the question. No, not really. So Kyle, you got to remember, you're not the only one asking questions. So that is the question is not a question, that's a statement. Chris, for starters, I have no idea what that means. What's for starters for what? What did you make? Joseph, not quite sure what you mean by that. Colafield Trader, explain. Explain what? So you guys got to remember, I have 7 cameras going, which means I have 7 sets of questions, all coming from different angles. So I can, how much you pay per contract? Well, it depends on which company we're talking about. Hugh, say this is not investment advice. It's not. That's what he means. So you're not a lone professional investment advisor. I never said that I was. Home Depot reports earnings before tomorrow's opening. I love Home Depot. You think the futures markets are hard? Nope, futures markets are easy. IBIT is a proxy for Bitcoin performance. It has weekly options. Yes, I know it does. But I don't trade it because it doesn't have history. Okay? It doesn't have, it hasn't proven itself, so to speak. I guess I'm late to the party. Temper, yep, you are. What's the lesson for the evening? The lesson for the evening is doesn't make sense. How much you pay per contract, it depends on what we're talking about. But you only make 15 cents if the stock gets assigned. What's 15 cents per share? So if I have 10,000 shares, that 15 cents per share looks pretty favorable. Scott Cook, awesome night, James. Many topics discussed and a great insight given. Thank you for your time. Scott Cook, you're welcome. So let's keep on going. Greg Cody, good evening. Timper, what is the ticker again? Well, the ticker we're looking at is Walmart, WMT. Justin Knight, oh, hold the stocks and sell the contracts. Wait, if the price for which you purchased the stock fall, you roll it forward into the next week. It's actually that simple. But you'll only make 15. So you already did that one. How much you pay for the contract? You got to, Harry. You got to ask me a better question, because I buy so many different shares. What did I pay for the contract? Well, I have so many. I don't know which one in particular you're talking about. What's the lesson for tonight? Tonight doesn't make sense. That's the lesson. Temper. I guess I'm late. Yes, you are. What is the ticker again? WMT. KC. Say hello, Brooke. Hello, Brooke. Is that Yahoo Finance for charts? Absolutely. No. I use Yahoo Finance for details that aren't on Thinkorswim. No, I use Thinkorswim for charts, but I use Yahoo Finance for dividends and the data stream. You know, the highs, the lows, the opens, the close. How consistently do they increase their dividends? What's the profit ratio? What's the profit margins? What is the earnings per share? You know, what's the revenue per share? You know, stuff like that. What time frame am I using? I'm using the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality chart. When you see a gap, is it pivotal to stay out of the market? No, it all depends on what the gap means. It went down 40% due to all the messes. D, how are you today? I'm not quite sure what you're talking about. What went down 40%? Do you like short-term options? Yes, I do. Mara has no dividends. I'm well aware of that. Probably you'll take a year to get close to 500 gain. Now, is that 500 gain, $500, 500 pennies, 500 nickels, 500 $1,000 bills? I'm not quite sure. Unless you're talking about UNH getting to 500 again. Well, then I'm going to agree with you. HS, good evening. Alan, PLTR, hell no. Alan, go take a look at how consistently profitable PLTR is. How many years have they increased their dividends to the shareholders? Is it 20 years? I don't think so. All right. Knox Blue, good evening. J Rich, good evening. Hitchin Yasad, good evening. Amen J, United Health, we already looked at that one. Can you do AT&T, the last one? Nope. Wasn't that quick? Look at it. Look at where it is. Okay? The last 30 days. What do you think? Up, down, up. Okay, it went from 26.40 to 28. That's over $2. Well, $2 on a $24 stock is close to 10%. Would I jump in after it already went up 10%? No. Look where the high is. It's not that far away. It's only what, 40 cents away? 30 cents away. Okay, the high is only 30 cents away. So no, I wouldn't do AT&T. Me, personally. You have fun with that one. Do you believe Elliott Wave has any validity? Yeah, for those who use it for what it's intended for. Robert, you're welcome. Mastermind trading. Do you only look at weekly options? Well, I am retired, which means I'm looking for weekly cash flow. Well, how else do you get weekly cash flow unless you have something that trades on a weekly basis? The only thing I know that trades on a weekly basis are weekly options. Okay, a good company. Remember, it always starts out with the company you buy. Is it a company you're willing to hold on to? Think about it. Why would you invest in a company you're not willing to hold on to? That makes no sense at all. Okay? It's your money. You do whatever you want. Me personally, I don't invest in companies unless I plan on holding them long term. Now, do I hold them long term? Not really. The longest I've ever held anything is 9 months. Well, because the stock dropped, it turned around, went back up, I made a profit, time to go. Thank you very much. Okay, so we just did AT&T. It's a no, sorry. Okay, got all that. Alan, PLTR, please. Well, he did say please, so let me show you why I don't like PLTR. All righty, let's go back to here. Let's go to here, and let's put in PLTR. Okay, now PLTR is going to show us how consistently has PLTR. Oh, look at that. PLTR, there are no dividends in the selected time frame. So riddle me this. You show up to a station or a channel or whatever you want to call this, and the very first word you see is dividend. Dividend stock talk. What's the topic? The topic is dividend investing for weekly cash flow. And the first thing you say is, well, let's look at Palantir. It has no dividends. Well, let's look at it anyway. Does that make sense? Seriously. We're looking at dividend stocks, investing in companies that pay dividends. Palantir, PLTR, no. It's just plain old no. Sorry, dude. What do we have over here? Isaac. My sincerest gratitude for your unwavering dedication, your generous sharing of knowledge, and your steadfast presence for traders. Shouts from Kampala, Uganda. Your impact resonates far and wide. Namaste. All righty. Dividend means they are done growing. That's not what it means. Dividend means specifically. In 1602 was the very first dividend stock. What was the promise made to investors by those who started this great thing called the stock market in 1602? You invest in our company and we will share our profits with you. A dividend is the profits that are shared with the investors. So if the company's profitable, they will give some of those profits to their investors. Coda, SPYI, do yourself a favor, or do me a favor, okay? Go to a financial website, whichever one you want to use. Put an SPYI and then tell me how many years consecutively has SPYI increased its dividends. Come back to me with that number and we'll take a look at it. Let's do it quick. Since you're still here, can we try SUN, please? No, because it's 11:45. I'm done at 11:30 at 15 minutes to go, and I still have a bunch of questions to answer. Okay, we already did AT&T, and that was a no. Just didn't look right. Do you recommend quantum computing stocks? I don't do anything risky, none whatsoever. Okay, so if it doesn't have 20 years of history behind it, it's automatically a no for me. I'm not in a position to be wrong. And nobody can guarantee with 100% accuracy that quantum computing stocks are going to be around for the next 20 years and are going to be successful. Nobody can guarantee that. But you know what? I have a very good feeling that Coca-Cola is going to make Coca-Cola for the next 5 or 10, 15 years. At least until the day I die. Same thing with Ford. I think they're going to be around for a while. Quantum computers, I don't know anything about them. So if I don't know anything about them, it doesn't make sense for me to invest in it. I can DM you with a cell number. Need advice on anything strong. Chris, awesome. Okay. Ooh, Hitman. Energy transfer. I don't like energy transfer. Only because the numbers just look horrible. Anthony, Mickey D's is a king of dividends over 10 years running. No, Mickey D's is a dividend aristocrat. It's 25 years of increased dividends, not 10, 25. And yes, MCD, McDonald's, is on my list. Hugh, study some crypto more. You seem to be a good trader, and I believe you can make more in crypto. Just my opinion. Either way, good stuff. Okay, thank you, Hugh, but I can almost guarantee that is incorrect because crypto does not have options. Crypto has no way to safely, predictably, and consistently offer me a rate of return without me having to sit in front of a computer looking for ups, downs, teacups, descending flags, rising flag, head and shoulder, all that crap. No, thank you. I have no desire to sit in front of my computer. You will figure out at some point in time in your life that money is not the we're-all, end-all. It's just one less thing to worry about once you get it figured out. But it's figuring it out. It's a challenge for everybody. Well, this works for me. 1% a week is over 50% a year. It handles all my financial obligations. Well, what else can I ask for? The house business, Chevron. I love Chevron. I do. Him, Pepsi. We already looked at Pepsi. I think it was the first stock we looked at. Wait a minute. Did we even look at Pepsi today? I don't know. We'll look at it tomorrow. Do you eat Sour Patch Kids? I did when I was younger, not anymore. A new thing. Try it. Great. Hitman, energy transfer. Yeah, the numbers are horrible. Seriously, they are. Take a look at them. Ilarbi. What is my opinion of ICT strategy? You actually got to explain to me what it is, because I have done a lot of things in my days. And acronyms or 4 little letters could mean almost anything. Okay, I was a fisherman, I was a lobsterman, I was a carpenter, I was an electrician, I was a plumber, I was a manufacturer, I did a lot of things. ICT, specifically, what does that mean? I appreciate your fry. Keep bestowing the wonderful knowledge. You got it. Chris, thank you. Uh-oh. That's it. That's the last question, which means I'm done for the day. Cool beans. It's 11:49. I work until I have all the questions. Now, I answer every single question. I got one more to go, and that's from Scotty. Mara and Riot have the largest volumes of option traded daily, even though they don't have any dividends, but pay great weekly premiums. I didn't know this. and did more research on them. Okay, I do trade both of those, and I do own both of those. All right, no more questions? Awesome. Kent, ExxonMobil, love it. XOM, gotta love it. Studio Quick, thank you, you're welcome. Club Med Tom, dude, didn't even know you were here. All right, that being said, you all have a great night. We'll do this again tomorrow, every night. Same bat time, same bat channel. And we do that. Okay, we're done here. You guys have a great day and end the meeting. There we go. And for you over here on this YouTube channel, see ya. And you guys over here on Instagram, see you later. Now you guys here on TikTok channel number 1, see you later. See you tomorrow. And for all you here on TikTok number 2, see you later. And for those of you here on YouTube number 2, one question, did you start seating in front? All right, one question, did you start seating in front of the screen? Seating? No. Thanks. See you, man. Hugh, have a great day. So bye all you guys on YouTube.